I know Jamie Dimon has said something similar, that the United States is essentially heading towards a cliff. We see that there's this cliff ahead. Like you're mentioning, inflation looks like it's going to be getting worse. Americans are already spending most, if not all, of their money. They're digging into savings, they're digging into the 401k, they're digging into the credit cards. If that problem gets worse, it's going to be even harder for somebody next year to build wealth, which means from an economic level, like what you were talking about back in the beginning, this recession might be worse than what people might expect.
A lot of people don't even think we're going to have a recession. They think we've avoided even a soft landing. But I think that, again, we're probably already in a recession. It's just that the numbers don't reveal that yet. They may have to be revised at some later date. Maybe after the election, we'll get a lot of these revisions, but not before. The economy is a lot weaker than people expect, and inflation is a lot stronger. Instead of this Goldilocks scenario that people envision, it's the worst case scenario, because you've got weak growth and inflation at the same time. And there are people that think that, well, those two situations are mutually exclusive, and they're not. I mean, that's what they thought in the 60s, and then came the 1970s. That's when they started using the word stagflation, because in the 60s, they thought the 70s was impossible, but then it happened. Because the people who thought it was impossible didn't actually understand economics. A bunch of Keynesians who think inflation is a byproduct of people working or economic growth. It's not. It's caused by government deficit spending and Fed money printing, which is what we had during the QE era. We had massive inflation unleashed by the government. It was the Treasury in tandem with the Federal Reserve working together to flood the economy with inflation. And now we're experiencing the consequences of all that new money being created and spent into the economy. Prices are going higher. They're going much higher. We're still early in the process where prices are adjusting to a new, much higher level, given all the new money. But, people's wages haven't kept pace. And of course, people's savings, aren't tied to the inflation. So everybody is being made a lot poorer. I mean, the people who are benefiting are the very rich who had a lot of debt and owned a lot of assets, real assets like, stocks or real estate. Inflation served them well, but the general public, was harmed substantially. Again, that's why Biden is so unpopular, because the people who are scoring him so low are living in the reality of this lousy economy. They don't exist in the fake world of statistics.
I did a video recently where I looked at the Social Security cost of living increases over the last 5 years, which came up right around 22%. The reported inflation over that same period, CPI, was around 25%, versus the S&P has grown by around 75%. So people who, like what you mentioned, the investors, have become significantly wealthy over the last 5 years, versus the average person has become poorer. But the thing that's interesting about...
Again, remember, that 25% increase in the CPI probably equates to a 50% increase in the actual cost of living. So those Social Security increases haven't come close to covering the added expenses that Social Security recipients are dealing with. But of course, all of those increased payments directly add to the deficit, because the government, doesn't raise taxes to make higher payments to Social Security. And so they end up having to print more money to pay for the COLAs, which creates even more inflation, which creates bigger COLAs. And so it's like a process that feeds on itself.
And I want to talk more about the retirement crisis that a lot of people are worried about in a minute. But I think the financially savvy who are paying attention to this are hearing, okay, well, if there's a recession coming, that generally means asset prices, stock prices, real estate prices would move lower. That's what we've seen happen in previous recessions. And in previous recessions, look at 2020, 2008, 2000, if I was sitting on a pile of cash, I could come in, buy stocks for pennies on the dollar. I could buy real estate for pennies on the dollar and make a lot of money very quickly. Is that something that you see coming in the next couple of years?
Not necessarily, because if there's a lot of inflation this time, which is what I expect, the stock prices and real estate prices may actually not come down that much. I mean, there may be some individual stocks that do, like a lot of overpriced tech stocks, so those stocks could come down. But the overall stock market may not come down that much. Real estate market may not come down that much because of inflation. But if instead of sitting on a bunch of cash, you're sitting on a stockpile of gold, that might be the opportunity. You may be able to sell your gold and buy a lot of cheap stocks and real estate in terms of your gold, because maybe stock prices, real estate prices go up 50%, right? But gold goes up 500%, right? That means that in terms of gold, stock and real estate prices crash. And so I think that's where people are going to see the bargains, or maybe even in some foreign currencies, you may see more significant declines in the value of U.S. Financial assets and real estate. So it may not play out the way it's played out in prior recessions. And also, in prior recessions, the government has been able to artificially goose the economy with bigger deficit spending and 0% interest rates. But high inflation may prevent that from happening. So the Fed may not be able to provide the type of stimulus that everybody has been accustomed to. And also the bailouts. When we had the financial crisis, when we had COVID, there were lots of stimulus checks coming in the mail, a lot of bailouts. We may not be able to do that again because the reason we're in so much trouble now is because we borrowed so much money back then to pay for those bailouts and stimulus programs. So this time we may not be able to do it again, which means we're going to go through a recession where nobody gets any help from the government. And nobody who's failing gets a bailout. So that could be a much more severe economic downturn than we're used to, without that offsetting help from the government. Of course, the government help came at a huge cost. The cost was everything being so much worse in the future because we just kicked the can down the road and made the problems that we were dealing with at the time even bigger, but we postponed the day of reckoning to some future date.
That sounds scary, especially because in the previous recessions, we never really had an inflation issue going into a recession. Like going into the 2008 financial crisis, inflation wasn't really a concern. I mean, sure, maybe when the money printing was happening, some people were worried about inflation, but it never really became a real issue. Same with before the 2020 pandemic. Now what you're saying is because we already have an inflation issue, if we go into a recession, which you're saying we're already in, getting us out of this mess is going to be a lot more painful. Is that what I'm hearing?
Well, exactly, because the economic solution that the Fed has always come up with for every problem was inflation. In fact, if you think about quantitative easing, that's just a euphemism for inflation, right? Quantitative easing is inflation. It's printing money and buying government bonds. That's inflation. That's right there. You're inflating the money supply. That's where the word comes from. It means inflation means to expand, and it's the money supply that gets expanded. In fact, if you get an old enough Webster's dictionary, that's what it says, that inflation is an expansion of the supply of money and credit. Prices simply rise as a consequence of inflation. They are not inflation, nor do they cause the inflation. They result from inflation. So if the Fed has always created inflation to get us out of every recession, if we finally have a recession that's actually caused by high inflation, where high inflation is the major problem that is confronting the economy, how does the Fed then use its standard playbook of more inflation to solve a problem that in and of itself was caused by inflation? And so that's why they're in a no-win situation, right? You can't fight inflation with more inflation, and it's not like fight a hangover by taking another drink, right? Just more of the dog that bit you. That isn't going to work. More inflation isn't going to solve a problem of too much inflation.
Thank you for watching, and I'll see you in the next one.